All right, well, hello there, everyone. Today's another very special day. It is Thursday, January the 13th, year 2022. And I have another special guest here. This gentleman is one I've spoken to you about. He's actually in the Navy, and I'll let him tell you about himself. But welcome to my channel, Tyler.
Thanks for having me, Mark. It's awesome to be here.
All right, well, thank you. Well, to kick this off, tell you what, do you just want to talk a bit about who you are and where you came from?
Yeah, absolutely. So Tyler Ferris, I'm from West Virginia originally. I went to the Naval Academy in 2009, graduated in 13 and joined the Navy, like Mark said, and ended up going to flight school on a pilot contract and started training as a helicopter pilot there. And once I finished flight school, got my wings, I went then to San Diego to specialize in the helicopter that I fly right now, which is the MH-60 Romeo. It's H-60 variant. Did my first tour in Hawaii, Kaneohe Bay, Hawaii. Spent 3 years there at HSM 37, and then selected to become an MH-60 Romeo instructor for the Navy back in Jacksonville, Florida, and moved to Jacksonville. So here I am now, coming to you from Jacksonville, and excited to be on here. But yeah, I first got interested in real estate in Hawaii. I had saved quite a chunk of money while I was on deployment, and I was a younger officer, a bachelor, and had, Mark and I will talk about this, but had some other investments, something I haven't told Mark, but my mother's a financial advisor. So I was kind of raised somewhat financially savvy, but was a little sick of sort of the traditional ways of saving money in this little nest egg fashion, and started to prescribe to a lot of the financial independence, retire early, the FIRE movement type podcasts and publications that are out there. And one of them that I listened to podcast wise was called Get Rich Education. It's hosted by Keith Weinhold. And Keith, after listening to him for probably 6 months, really did change my mindset. I read the Robert Kiyosaki Purple Bible, Get Rich, the Rich Dad, Poor Dad, as well as several other books. And when I showed up to Jacksonville in June of 2019, I was pretty much supercharged and ready to buy something, because I had been researching for like a year, and I was sick of that. I was really sick of that analysis paralysis.
All right, let me ask something.
Yeah,
let me ask something real quick then. And let's go back to say flying, and then I'll get into what you just said.
Sure.
Out of all your years of flying, do you have, say, one mission that you've been on that really sticks in your mind that you would care to share with everyone, be it an exciting one or just a fulfilling one?
So sure, yeah, I think so. I do. And in the Navy, Mark and I were talking about this. In the Navy, the mission is very much how do we defend the United States, and how do we kind of police the world. And so my helicopter specifically is very much a reconnaissance type of helicopter. We have onboard radar, and we have an onboard sonar, so we can track submarines, and that's sort of our published mission set. But there was a mission in particular where it turned into more of a search and rescue type, so more of a humanitarian relief type of mission. And we were off the coast of Molokai, which is an island just to the east of Oahu in Hawaii, and ended up saving 3 people that were stranded out there. And for me, we train to all these other tactical mission sets, but that one is really, I can leave the Navy saying, okay, I actually did something. I didn't just train to it, but I actually was able to save somebody. And, to your 2 sons who are in the Coast Guard, I think I told you this before we started recording here, but I admire them. I like I said, I would reconsider going through the Coast Guard, because I found that one mission so fulfilling in that moment. But I have done other search and rescue since then, but mostly search, I would say, not rescue, which is always sad. But it's just a reality of being in the Navy when you're out in the middle of the ocean. But to all the mission sets we train to, that one I think is the most fulfilling.
That sounds pretty good. That would be very fulfilling. And no matter what you do the rest of your life, you may have more successful search and rescues, but my guess is that first one is going to stick with you forever.
I think you're right. I think so. I was very young and impressionable at the time. I was not quite an aircraft commander yet. So that really, it really made this, at that point, over 2 years of training that I'd been through, it really made it worth it.
Okay, well, good.
Yeah.
That's interesting. All right, that sounds good. Well, we'll move on here just a bit. But you mentioned, I think, looking into real estate for maybe about a year, and you had that analysis paralysis. And personally, I've never had to deal with analysis paralysis, but I know many investors out there do deal with it. So, is there anything that you can say if there's someone watching that is in that position now, they're just kind of stuck. They're analyzing deals, they're looking, and they're just caught up in analyzing and they get paralyzed. Is there anything that you think got you out of that analysis paralysis that caused you to take that first step?
I think there's a point at which you just have to take action. And even if you do the wrong thing, you learn still. And unless you have a little skin in the game, be it either financially or sweat equity or whatever, as long as you've got some kind of skin in the game, even if you fail, you're going to learn, and chances are you're going to learn and do it again and do it the right way, and you're going to grow. But you kind of have to take a leap off that diving board into the pool of an unknown at some point. For me, I'm a little conservative, and I've become a little bit more risk tolerant, especially with real estate investing. But initially, I was just so conservative that I was just scared, to be honest, And for me, I went with a pretty safe option, which was a pretty well-known turnkey provider here in Jacksonville. And I knew the reputation of the company. I knew that basically, as long as I brought the money to the table, there wasn't really much else I had to do as far as really sweetening the pot on the deal. It was kind of a fixed product, And so that was my first rental beyond just a home that we bought here that we live in. And that gave me the confidence to then go on and meet new people, which led me to meeting you, which led me into the Northwest Indiana market, which led me to then going away from Turnkey entirely, in the sense that I'm going with one company and meeting a realtor independently and buying a home straight off the market instead of through a turnkey provider, which I'm sure we'll talk about. But to answer your question, it's just at some point you have just got to take action, even if it's the wrong action. And you're going to learn from that action. If it goes poorly, you're going to learn from that action if it goes well. But either way, unless you have skin in the game, I truly believe that you're just not going to advance. You're not going to progress like you probably want to.
Right. I agree with that 100%. Because I've shared my story on my channel different times. But when I bought my first rental house, I just jumped into it. I didn't do any research at all. I didn't read any books. I didn't look at any YouTube channels. I just made the decision, I want to get a rental house. And I bought a rental house. And within 2 months, I had to start the eviction process to evict my tenant because I did not know what I was doing, which really stressed me out. But I made it through that, got decent tenants, and that led to me getting house number 2, then house number 3, 4, 5, etc. But taking that first step, if I had started studying it, I could have gotten stuck in that analysis paralysis. Maybe yes, maybe no. But just by jumping in, I almost sunk, like I almost drowned, but I kept swimming, pulled myself up, and have gone on to have so far a successful real estate investing career.
Yeah, I don't think you can say enough for that that grit and perseverance mentality that not just in real estate investing, but in life, that's required to achieve your goals and to succeed. And so I'm thankful. I had good parents and good friends and a good career that has taught me that, good mentors like yourself. So you can't really say enough about that. I think it goes well beyond real estate investing, but plays extremely well in real estate investing as well.
Right. So, all right, sounds good. I appreciate everything you just said. So let me ask you this then. Your first house you bought was through a turnkey operator.
Correct.
And then you went out onto like the MLS, used a real estate agent and bought more houses.
Correct.
Well, if someone is watching this and they have not bought their first property yet, what do you think you would recommend? Do you think someone should go turnkey, or someone should go to the MLS and buy one that way?
I think I don't regret my decision at all. The property I bought through the turnkey provider here has still done really well. I think that, I would not ever advise just doing zero research. So again, I don't regret the year that I spent researching and saving. I think if I'd acted a little earlier, now knowing what I know, then there's more gains to be had. But I'm not looking in the past. I'm looking forward. But if I was to tell somebody who's in that kind of scared mode, that really risk adverse mindset, if I were to advise them on how to proceed cautiously and at least get their foot in the door, I think turnkey is an excellent option. And there's tons of different providers out there. You got to do your research on the provider, but there are extremely reputable providers who are doing really good things. And I just don't think that's, I think it's a great option for beginners for sure.
Right. I agree with that. If I could have gone back in time and started over, I may have gone that same route myself. But because what I did, I had a total of 5 rental units in my local area in Virginia. And then I moved on to a turnkey operator up in Northwest Indiana. And actually, maybe back up, prior to going to Indiana, I had bought a house down in Alabama. And I haven't had a good, it hasn't been that good in Alabama. I have 2 houses in Birmingham, but I'm going to sell both of them.
Yeah.
So I had like 6 units, and then I bought my first rental using a turnkey provider. And I remember thinking, wow, if I had done this from day one, I could have better learned the ropes without making as many mistakes. And what I did up in Northwest Indiana, when I used that turnkey provider to buy like 4 or 5 houses, and during that process, I made more contacts, and then I ventured out onto the MLS, and now I've bought from the MLS. I've bought from not wholesalers per se, but other contacts there.
Yeah. I think I can even, as a specific example of how that really did pay dividends going with the turnkey provider, was the property analysis. I had all kinds of different spreadsheets I'd collected, ones I'd made myself. But the turnkey provider that I went through sent me theirs, which was very professional. And I compared it to, ran the same numbers, but with my spreadsheets, and saw what they were using for maintenance or vacancy in this market. I would have probably analyzed it way differently. But because this provider in particular they manage like over 3,000 houses in Jacksonville, because they have a property management department as well. So they have the data to actually provide you not just guesses, but actual maintenance and property management and vacancy numbers. So that was one area where I sort of knew how to analyze a property, but when they sent me the real numbers on the house that I was buying, it kind of gave me the confidence to say, all right, well, here I need to trust the numbers that I've come up with as well, even though maybe they're a little different. In the end, they're pretty dang close. So that was one area where I felt like it built a lot of confidence. And then sort of separate from the turnkey provider, but in this case, they're one and the same because it's a big company. The property manager, I utilized them a lot. I asked them a ton of questions, especially when it came to the property management agreement and also the first lease, or I guess the only lease with this company. I asked them a ton of questions from an owner standpoint, and they answered them all really professionally and were very patient with me. And so when I went and did it by myself the second time, or I guess the first time by myself without a turnkey provider, I had that confidence knowing that it works. This company does it professionally with over 3,000 different rentals. So this is how they're doing it here. I can go do it somewhere else for sure. And I know it'll work.
Yeah. All right. That sounds pretty good then. And I can't remember if you've said this already or not, but how many rental units do you currently have?
So I currently have 5. So I bought the first rental in Jacksonville through the turnkey provider in 2019. 2020, actually. It was right after COVID hit. And, you can only understand how much my fear was magnified as the market was crashing. And I still made that decision to pull the trigger and buy it. And man, I'm so happy I did now. That was a decision that I'm not sorry about. But as I realized kind of how ripe the market was with low interest rates and and discovered the Northwest Indiana market where home prices were still pretty affordable. And I still had some cash. I basically decided, I made it a goal for 2021 to buy 4. And that's what I did. I bought 4 in the Northwest Indiana market in 2021. So I'm at 5 total now. I think 2022 will be a slightly different goal as far as quantity for me. But I think I will still acquire a few more with maybe a little higher quality. And we can talk about that more. But I'm not sorry about what happened in 2021 at all either. I'm very excited about them.
Right. Well, very good, very good. Well, before we get into, let's see, before we go more into real estate, real quick, just kind of talk on what your other investments are.
So before real estate, I was pretty much stock market, and specifically actually just a combination of thrift savings plan through the government, TSP, as well as a personal Roth IRA through Schwab. And both of those have made it pretty much my goal since probably 5 or 6 years ago to maximize those as far as contribution limits go. So within my TSP, I prescribe to TSP tips for any military subscribers to your channel, Mark, and I change my allocation there about once or twice a month. I think right now I'm sitting pretty heavy in the C fund and a little bit in the S&I fund, but I'd stay pretty heavy in the C fund and TSP. And then within my Roth IRA, personal Roth IRA, and the Schwab, or with Schwab, it's primarily a mixture of tech stocks that I've bought probably close to 10 years ago now when I very first started investing, and I've just held on to them, to include Tesla, which I'm very thankful for, although it's volatile as hell right now. But I'm just a patient long-term investor. I'm not a day trader, and that's my strategy as far as stocks go. And then I do have an S&P 500 ETF that that's actually been more of my kind of regular investment recently within the Roth. Is just something that's a little bit more stable to try to counter out some of the volatility with the stocks.
Oh.
I do also, I guess I didn't even mention this before we talked earlier. I do have, I don't know if you call this a investment or not, but again, I mentioned my mom is a financial advisor and specifically sells life insurance. So I do have a life insurance policy as well. That is, it's a $100,000 life insurance policy in addition to my SGLI service group life insurance. And that one is that'll pass on no matter what to my wife or whoever. And so my mom has always trained me that life insurance is the best way to pass on tax-free money. So I sort of consider that. I don't factor that in my net worth, but I do still consider it an investment of some sort. And I do have to pay into a bit of a premium on that every month. But I got in when I was like 18, so it's very low.
Okay. Yeah, it all sounds pretty good. And you said, I think what is the key thing is you're a patient, long-term investor, both in all your investments, stocks, real estate, life insurance, and it's just my humble opinion. There are many different kinds of investors, but the patient, long-term investors, from my perspective, usually are much more successful than the ones who are out there trying to get rich today and just trying to get buy the Tesla today that will 10x by next year, or buying the Dogecoin today that will 100x by next year. So if say you're speaking to a young sailor and they come up to you and they're like, "Sir, I have $500 and I want to do something with it to grow my money. Do you have any suggestions for me?" Do you know what you would tell them?
Honestly, I would say open up a brokerage account, be it through a reputable company or reputable bank, financial institution, and just put it in something that matches the S&P 500. I think it's just stable. It's bound to continue an upward trend. And I realize we're in a bull market now, so I don't want to guarantee anything. I would never say that to them. But if they're truly wanting to get into investing and they want to have somewhat of a hands-off long-term approach, I think it's hard to go wrong with that.
So, all right. Well, good. I agree with that. That sounds good. So say you take that same young man or young lady and they see a year later and they're like, well, sir, guess what? And they're all excited. My $500, I now have turned it into, I'll make up a number like $14,000. Do you think I could buy my first rental property with $14,000? What do you think you'd say?
I would probably tell them not to do that, which sounds a little counterintuitive considering I just talked about buying real estate. But I'm a big believer in diversifying assets, and I think to put every amount of dollar invested you have in the real estate is really risky, even in this market that is showing great appreciation. So I would probably advise them to probably build up a little bit of be patient with that, pump some more money into the stock market if they want to go that route, or into a very somewhat safe, moderate safe ETF or mutual fund, and then maybe save some money investing or dabbling in maybe some stocks that are safe. With inflation the way it is, I would never advise a savings account or anything like that. I just barely even call that investing anymore. Or maybe just save some cash, although again, you're losing 6, 7, 8% to inflation right now. And if they are truly interested in real estate, advise them to set a goal for themselves to save some kind of cash value that's separate from that money they invested in that S&P 500 matching fund. And when they hit that down payment, not take it away from their previous investment, but make it a goal to hit that down payment, and then they can buy that home. That's what I would advise them to do. I think you can get really attracted to the silver lining or the shiny object syndrome when you make 10 grand here and now you're taking that to buy something else. And again, I said it up front. I was born a conservative guy and conservative investor, so that's my approach personally, Mark. But I know that we could argue this all day.
Well, I think I agree with that because I've said on my channel, my belief is someone can create wealth better with real estate than they can with stocks. But at the same time, with real estate, the question I asked you, with $14,000, perhaps that can provide a down payment for a rental house somewhere in the Midwest. But what about cash reserves? What about money for the what ifs? So I think you gave the right answer, because you don't want to put all your eggs in one basket. And I've spoken about it on my channel before. I see too many young people nowadays putting all their money just into crypto, which I disagree with because crypto is too volatile. And I know you mentioned you don't have a crypto investment yet, but with crypto, you can make intelligent investments with it. But someone who's 18 or 19, they have their first $500 to put it all right into some currency, and that's all they do. To me, that's more like gambling. It's not investing.
I agree 100%. And I think I'm about to diversify into some crypto. And I can tell you right now, I already know what I'm going to do. I'm going to buy some Bitcoin, as much as I can afford in the moment. I'm going to set aside and forget about it for about 10 years or more, and then we'll see what happens. That's my strategy right there. I'm not going to be a day trader crypto, and I'm not going to chase the thousands of different cryptos out there. So I totally agree with you. I think we're like-minded there.
So, all right, that sounds good. All right, let's turn back to real estate for a minute. You have 5 rentals. You have your other investments. You mentioned adding to your real estate portfolio in 2022, but where do you really see yourself going?
So this kind of brings up a bit of a dilemma that I've personally been dealing with recently. So it's kind of fun to bring it to your channel, and I'm happy to have people chime in here. But right now, the house that my girlfriend and I live in, we bought in 2019 for $210,000. We had a lot of value add opportunity. It was very safe and structurally sound, but very outdated. So we put in the sweat equity and we redid 2 bathrooms, built a big fence in the yard, and redid the kitchen. And we put about $25K of cash into the renovation. The house has appreciated almost 100K. So depending on what site you're looking at, Zillow's appraises it or estimates it around 300K, Realtor.com at 280, Redfin a little bit above 300K. So I'm just kind of going somewhere in the middle, but it's 90 to 100K in appreciation. Well, it's real tempting to just say, I'm going to move on and sell this guy and take the money, the equity out of it, and have that big pot of money to buy maybe 3 or 4 rentals in Gary, or Northwest Indiana, I should say, not necessarily just Gary. However, the opposite side of that is, this is what's driving the dilemma, is that Jacksonville, Florida is the #2 hottest market in the nation, according to Zillow. Okay, so that's my source there. But appreciation here is insane. I mean, it's 10% over the last 2-3 years. And I do anticipate, especially considering what neighborhood we live in here, that appreciation will continue for at least another few years. And so the other way I could see this going, and the decision that I think I'm a little bit closer to right now, is that I refinance. So I bought this house with a VA loan. So for non-military or government subscribers, 0% down, no PMI, which is an incredible advantage to us. And we're very thankful for that opportunity. But put 0 money down, so no down payment and no PMI. And so I would like to probably, this was the other option, refinance in a conventional loan and leave 20% equity in, and I would still be able to take probably 20 or 30K after closing costs out with me for renovations on the next place. That would do 2 things. That would allow us to keep it and rent it, and it will also free up my VA entitlement. That's not to say I couldn't go use the VA loan, the portion I have left of it, to buy another home in another market, but it would open up the entitlement on it if I'm looking to upgrade into a bigger or more expensive home. And so the idea would be that this would become rental number 6. Rental estimates around here are about $2,000, and my mortgage right now is about $1,200. So the cash flow ability, now that's not factoring in your property management, maintenance, vacancy, CapEx. All right. And it's just kind of a rough number, but cash flow potential is $500 to $600. The refinance amount would be probably around a 240K loan by just a 210. So I would expect that mortgage to go up a little bit as well with the cash pulled out. But it would cash flow, it would rent, it'd be number 6 on the rental list and the #2 hottest market in the nation. And then to further expound upon this option number 2, we would go to our next market, of which I'm actually not sure yet. I was telling Mark, I don't know my next duty station, but wherever it is, we would take that VA loan and ideally buy anywhere from a 2 to 4-plex, which is still considered residential, and house hack the crap out of it. Something with a lot of value add. We've developed the skills through this place, so we've got the tools and the skills. So we're pretty confident we could live in it, renovate it. We would have the cash from the cash out refi as well as other reserves that we have to do it pretty quickly. And then we would live basically rent free with a couple more doors under our portfolio at that point. So my goal by the end of this year, if everything went perfect, assuming I chose option number 2 there, would be basically to move to our next market, renovate a 4-plex if I can find one that's somewhat affordable, and have this as number 6, live in one of those units and 3 more units rented or 3 more doors, and basically have 9 doors by the end of this year. That would be my goal.
Okay, that sounds pretty good.
Yeah, it's tempting to take that big chunk of money, but clearly, because I talked about option number 2 for twice as long, I think that's where I'm leaning.
Yeah, I like both options. And if I was in the same situation, I'm not sure which one I would take, because I have taken a chunk of money before from selling a house or cashback financing, and I've taken like $65,000 and turned that into 9 properties, with a little bit extra added to it. But on the flip side, if you did a cashback refinance, you get a conventional mortgage. If you're still positive cash flowing, which it sounds like you would be,
mm-hmm.
and then you get a little bit of cash put in your pocket, which helps you maybe if you do need to put a down payment on that 4-plex Or maybe you get another VA loan, but now you got, let's just say you get $25,000 in your pocket and you need to rehab the building that you just bought. That $25,000 can go a long way towards buying materials.
Yeah, and I can play devil's advocate with myself here, because I can only imagine some of your subscribers saying, "Dude, take the 80 or 90K and go buy like 3 or 4 more rentals in another market," and that is tempting. That is extremely tempting. So, if you know me personally, give me a call and let's talk. And if you don't, feel free to comment on Mark's video here, and I'd love to hear your inputs, because it's a tough one. But I think both are good options either way. And talk to me next week. I'll probably change my mind.
Yeah. Well, one thing, just thinking about it, is if you have, I like diversification. You have 4 rentals in Northwest Indiana, 1 rental in Florida, and you're getting ready to, in a few months or whenever it is, you're moving to a totally different location where maybe you're going to buy a duplex, triplex, quadplex. If you know a good property management company in Jacksonville and you have contractors and you know the property, you're living in the property, and you can positive cash flow, there's nothing wrong with going with that option, doing a cashback refinance, put it into a conventional mortgage. It's positive cash flowing. It gives you some money for your pocket, and you keep touch with Jacksonville. You may go on in your Navy career, but you always will keep tabs on Jacksonville now, and you may buy more rentals in Jacksonville, or who knows what you'll do.
That's a wise point. I think that is a great point, that not only am I a big fan of asset class diversification, but geographical diversification when it comes to real estate. But to your second point there's a substantial chance that I'll return to Jacksonville the way that my career path will flow. And if we come back here and housing prices continue to rise like they do, well, shoot, we've got a house already, and we know it's what we want because we're the ones that basically did the furnishings in it. So that's another added advantage that I haven't thought about as much, but that's a great point, Mark.
So, all right, well, that sounds good. Well, I have this feeling if we wanted to, we could just keep on talking for a long time.
I agree.
Yeah, but tell you what, why don't we wrap this up? But before we wrap it up, I'll turn it back over to you, and just whatever you want to say, just the floor is yours. Just go for it.
Well, it's been an honor to be on here. I would love to talk more if you all are interested in what it's like. I'm still a beginner at this. I mean, maybe it doesn't sound like, or maybe it does if I said something stupid, but this has become a hobby of mine, not just an investment strategy. And anybody out there that is looking for an opportunity to diversify beyond just your standard stocks and stock market investments, real estate really does return. It pays in way more than just one way. Some would argue 5 different ways. And especially when it comes to inflation, it's hard to beat an investment like real estate. So I get excited about it. And Mark, thanks for letting me talk about it on your channel. I mean, I'm a nobody, but if you just want to, pick my brain on turnkey provider I used here in Jax, or anything else, AV related or real estate related, I'm happy to talk to your subscribers, Mark. So I'll authorize you to share my email address, so you can send that out if anybody reaches out to you.
So, all right, that sounds good, Tyler. I appreciate that. And
Thank
I'm
you.
sure, if you want to, we can always chat again on, maybe in a month or so. We can update each other on where we're at, what we're doing.
Yeah,
So,
I look forward to keeping in contact, and I know we do regularly anyways, but it'd be fun to mark our progress and kind of see where we end up going, especially with this big decision that I'm facing. I think in like 6 months from now, a follow-up video to discuss how it actually all turned out would probably be maybe beneficial to subscribers.
So, all right, that sounds good. All right, well, I'm going to wrap this up, but if you can't, Tyler, just stay connected, and I'll stop the recording in just a minute. Okay.
Thanks.
So, all right. Well, thanks so much, Tyler, and thank you, audience, for listening. I'm sure if you stuck here till the end, you learned a lot about a variety of different topics. And if you are interested in the Naval Academy, perhaps you could reach out to Tyler as well and talk to him about the Naval Academy. So for both Tyler and myself, we thank you for watching. And this is Mazske Finance, and I will be signing off.